Well, welcome everyone. We're right on 7 o'clock Australian Eastern Standard Time. My name's Dennis Wong and welcome to tonight's Real Estate Investor webinar, how to find and research discounted, but we'll also look at how you can use our platform to find manufactured growth investment property opportunities. So welcome along, guys. Tonight's webinar will go for approximately 50 to 60 minutes. We'll have time at the end for a Q&A session, so your microphones have been muted for those that are tuning in for the very first Real Estate Investor webinar. But if you do have any questions, just feel free to type that into the questions section. Just hit enter and I'll have time to go through it at the end. Now, if you do have anything that's quite important feedback or anything during the session, just there's a raise my hand feature on the GoToWebinar panel, so just click raise my hand. I'll then stop what I'm talking about and I'll have a look at your question or feedback and see if I can help with that. So welcome along, guys. We've got a few people just tuning in, so we've only just started, guys. Welcome along. So look, just to make sure that you get the best experience tonight, just a couple of housekeeping things. Just make sure, obviously, you got your volume turned up, and if you are running any programs in the background, perhaps that's using a bit of data, it's affecting your audio or your visual, just make sure you just put that on pause for the time being, just for the next hour or so, and that way you'll get a faster internet connection and hopefully a better experience on tonight's webinar. Just a quick general advice disclaimer. So look, really tonight, any information provided should be used as an overview only. Of course, I don't know your personal situation, so please, if there's anything that's presented in terms of properties or suburbs or anything like that, it's just for information purposes only. So you should always seek professional advice before making any financial decisions. So like I said, my name is Dennis Wong. You may have tuned into some of my previous webinars in the past. I've been investing myself now for over 12 years. I've got experience with renovations and positive cash flow properties, and I've been with the company now for a little bit over 4 years. So for those that have just joined the real estate investor community, welcome along. I mean, this line essentially sums up who we are, what we do. I mean, you know, we've essentially been successfully helping clients build wealth through property since 2006. And just a little bit of extra background, we were founded obviously in 2006, so 12 years now. We've got offices in the Gold Coast, which is our head office, but also Melbourne, Auckland and Christchurch. We are a publicly listed company, and our chairman is the ex-realestate.com.au CEO, Simon Baker. And we've got a member base of approximately 300,000 members, part of our community. So we're all about being strategic, data-driven to help investors use property as a vehicle to create wealth. So look, just to get an idea on tonight's audience, I've just got a couple of polls tonight. I'm going to share the results just as a bit of a summary, just to give you an idea of, you know, who else is on tonight and perhaps, you know, are they in a similar situation as yourself. So I'm just going to launch this on screen. Just want to get an idea whether you have a property investment strategy in place already. So when I'm talking property investment strategy, I'm talking about whether if you decide that you want to do renovations or you want to acquire a duplex or dual income property for positive cash flow. Perhaps you're looking at subdivisions. Just really get an idea of where you're at, and perhaps you don't have a strategy in place. Just hit other. Maybe looking at developments. There's one that I'll be covering tonight being strata titling, which is not on there, so you can obviously put other in there, but just want to get an idea of tonight's audience to see if people already have a strategy in place and what that might be. All right, so I've just got over 50% voted. Thank you, guys. I'll only keep that open for a couple more seconds. All right, thank you, guys. So I'll just close that off and share it with the audience. So quite surprising, actually, because you know, from recent discussions from myself and some of the team, renovations seems to have been quite popular, but looks like tonight's audience is not as popular. It looks like it's more positive cash flow, which is fantastic. So I could touch a little bit on that actually tonight. I wasn't going to cover positive cash flow, but I can have a look at that. Subdivisions, developments, renovations, and then we've got other as well. All right. So in addition to that, how many properties do you own? So just want to get an idea as well where people are at tonight. You know, are you just starting out, you've got 0 properties, perhaps you've got the 1, being your own home, or perhaps you're in that small niche market in Australia where you've got 4 or more properties in Australia. So again, I want to keep this open for a few seconds, guys, and everyone's voting very quickly, so thank you. All right, so I'll close that off. Thank you, guys. So we've got a small percentage tonight with 0 properties. So welcome along, guys. Hopefully you will pick up some tips and tricks and learn a little bit more about the research side of things tonight. So welcome, guys. We've got 26% with 4 or more properties. Fantastic. Congratulations, guys. I wonder if any of you guys have got any properties in Sydney and Melbourne and you've had them over the last 5, 8, 10 years and been able to obviously take advantage of the fantastic growth that's occurred down there. 11% 3, 33, most people have 2 properties, so probably their own home and 1 investment property. All right, excellent, guys. Thank you for your participation. So just to give you a snapshot of what we do as well, we're a little bit different to your typical property data company or acquisition service. From a tool perspective or a software perspective, we do have software that helps with the whole acquisition process, from searching, analyzing, the acquisition stage as well. So, in terms of being confident during negotiation, knowing exactly what your price ceiling is, how much you can, you should be paying for a property, what's it worth, because that will give you that confidence from the previous stage in the analysis stage. Tracking, we have a portfolio tracking and also an accounting software through our partnership with Xero, which really can help with when it comes to tax time to producing reports to your accountant. All right, so how do you buy property at a discount? So these are just, some tips, and for some of you guys who've been long-term members probably have seen some of this content before, but just a bit of a refresher. First of all, what is a discounted property? So it is very different. Discounted property and below value is actually very, very different terminology. So essentially what a discounted property is it's a property that is purchased below the asking price. And look, finding a genuine discounted property is not easy. More often than not, sellers will actually list their property higher than what it's worth. It could be because of emotional attachment, or they've seen the property, a neighbour down the road that has owned it for the same period of time, sold it for a record price, but their property is nothing actually like their property. It's renovated, extra bedrooms, media room, they've fully renovated it. But there's that perception that they think they can get the same amount or close to it. And the really important note is that you can actually buy a property at a discount, but you can still pay too much for it. So that is the key to be aware of, and that's where research comes in to really allow you to understand what is it really worth. So what do I mean by that? Well, let's just say there's a 4-bed house asking $500,000, and you end up buying it for $480,000. And so fantastic. You negotiate 20 grand off it. It can help with stamp duty or other costs, or help furnish the property. But without doing the research, the highest comparable ever sold in that area was actually $460,000. So even though you managed a $20,000 discount, you've also overpaid by $20,000 as well. So what that means is that you potentially could lose equity. You may not be able to refinance sooner to tap into surplus equity to buy another property. You have to wait for the market to catch up, and if you've bought in the wrong time, and it's just when the market's about to turn and it's hit the peak and now it's slowing, that 460 or 480 could continue to drop a little bit. So just something to be aware of. And being able to buy under fair market value is a way that can allow to create instant equity. So it really, because there's and there can be genuine discounted properties where for time restraints, or a seller's bought another property and they really just now need to get rid of it because they've got to use that money for the other purchase, or they're going through a divorce, they just want to be done with it. So if you understand why a seller is trying to get rid of the property, that can also help. So property market cycle. So this is going to be important too, because this can dictate whether or not you can actually get a discounted property. And obviously in parts of Melbourne and Sydney over the last couple of years, it's probably been difficult. The level of discounting has been very, very low. It's changing a little bit. So now once it becomes a buyer's market where there's actually more sellers than there is buyers. Buyers have more choice, they've got more negotiation power. But the key thing is to remember that properties go in cycles. And you look back 100 years or even 20 years of property data, you look at any suburb, there was always going to be peaks and troughs. And if you've bought in a blue chip suburb, where you're close to things like schools, transport, amenities, generally once an area cools and it bottoms out, the next peak will generally beat the previous peak. All right, and so that's the important thing. If you're time in the market is really going to assist you in generating long-term wealth. So again, a couple of things to remember across Australia. There's going to be boom and bust trends across districts, cities, suburbs. Some suburbs could have a couple of markets within them too. So bear that in mind. So when people say the market, there's a very, very general term. And they can be at different levels, experiencing varying rates, as we've seen in Melbourne and Sydney. Extraordinary growth in such a short period of time. When you compare to other places like Brisbane, for example, much more affordable. The growth hasn't been as high. You're not seeing double-digit figures. It's not as common as a lot of suburbs in Melbourne and Sydney. And of course, if you can understand where your property in the suburb resides in the cycle, timing the market's going to obviously help as well in terms of the level of discount you can achieve and then the potential growth that you can get just from the natural demand and increase. So obviously, around that optimism or the hope just after the depression is going to be the key. It is very hard to time the market, I've got to say, because obviously when you're looking at data, it's historical, but there are things that you can be looking at, drivers that you can be looking at that may lead to that market changing. So in terms of discounting, how does property cycles, and discounting relate? Well, during a boom market, it's generally going to be more difficult to achieve higher discounts, if any, because there are a lot of buyers in the market, in the area. There's a high level of demand, and so more often than not, properties are actually going to sell over the asking price. So, there's been instances where if you've gone in and you've offered a lower price, I'm pretty sure anyone out there, you're dealing with agents, they probably never even got back to you because they're getting so much more higher offers above the asking price that they're not going to waste time speaking to you about negotiating you up. Sydney and Melbourne, great examples. You've heard of properties a couple of years back. Melbourne probably a little bit more recently than Sydney, where they were selling $50,000, $100,000 over the asking price or over the reserve at auctions. Whereas in a bust market or a slowing market, there's going to be less buyers, a lot more properties for sale. So there's more competition as a seller, so less demand. It's going to be easier to negotiate a higher discount price. So if you find a property where the seller situation requires a timely sale, like I talked about before, then obviously you may be able to negotiate further savings. And I'm going to show you an example of a seller situation where perhaps there's been termites that have infected the property or a fire has gone through, and show you how to find those. But keep in mind, capital growth rates are going to have an impact on your equity. So in a booming market where perhaps you can't get a discount, but you're actually paying market value, or maybe even a little bit more, don't forget, if it's early on in that boom phase, you're going to achieve higher capital growth anyway due to the demand in the area. So it's going to quickly increase in value anyway. And again, you're going to think about, buying a discount is not always a good thing. Why is it at a discount? It may not be because of sellers trying to get out quickly. It could be because it's something faulty about the property. Building and pest inspection is going to be very important. So, buying a property at a much discounted rate could actually become a liability too, because it does set a lower comparable price in the in the area, and it may become a benchmark price, driving the value of the suburb down even further. So there's just some examples of some figures that are just very general in terms of the types of discounting depending on the area. Barry's just said he's not getting any audio. Just bear with me, guys. I'm just going to let him reply back to him. If anyone can hear me out there, can I just get someone to just say yes, you can hear me? Just want to make sure that I am actually on. Okay, thanks, Michael. Thank you, Andrew. Thank you, Beth. Thank you, AJ. Okay, great. So just Barry. All right, I've just asked Barry to log off and join back in again. All right, guys, let's keep going. So look, here's an example of a suburb that's still increasing in value. Now, by no means am I suggesting that you should go out and buy in this area. This is I just really want to highlight an example where, at the moment we know the Melbourne market, or Melbourne in general, it's cooling. And there's been drivers to indicate that in terms of the level of discounting is increasing, the number of auctions is reducing. Again, time of the year, being winter, that is generally the case, but it is much lower than what it was the year before. And clearance rates are also down. Days on market are also high. So what I mean by days on market, that's basically how long it takes a property to sell. And usually you can use the average or the median as a factor. So 2018, sort of around that Easter period, that's when it sort of really started to cool in Melbourne. But have a look at Werribee, 32 or 30 k's at west from Melbourne CBD. And if you have a look at the growth, from 2010, 2012, it's sort of bottomed out a little bit or cooled, but since then it's just been increasing. And, even, very steep from 2016, 2017. If you look at the figures on the right, 2016 jumped 16.9%, 2017, 22.4%. So these are just house prices too, by the way. It doesn't include units or townhouses. And 2018, $500,000. So Werribee's finally hit the median price of $500,000. So just think about it. For anyone based in Melbourne, you think of the east, anything 30 kilometres or 32 kilometres east of Melbourne, it's suburbs, you're not going to be able to get a house for about $500,000. You're looking more about 50, 60 kilometres out. So still very affordable in the west, and west is obviously changing. But again, like I said, this is just an example. It's, you can see it has cooled a little bit, only 7.5%. But if we have a look at the average days on market for, every quarter of this year, January was 57 days, March 40, June 33. So, it was still quite in high demand. There were a lot of buyers, and properties are selling quite quickly. So don't be put off by what you hear in the media about, the property market crashing, or, it's not a good time to buy. If you can still comfortably afford to buy, it's still obviously worth it, because time in the market will obviously help you in terms of being able to generate wealth. So, in this particular area, it's probably hard to get a discount deal, but again, it's all about understanding how long it's been on the market for, really understanding the seller's motivation. This is where we can help you with some of those that research. So some tips to help you with your next search. Identify a property that, where it's a motivated vendor. So things like, are they going through a divorce? Are they moving overseas? And, you ask the agent, try and suss out the agent and see if you can get that information out. Check the suburb health, so look at some of those drivers that I've talked about. Estimate the value of the property. Listing history, that's going to be important. I can show you that. Really understand if a property on the market has changed agents, have they dropped the price, they fall over at auction. That's really going to enable you to negotiate more confidently and strongly, and be able to perhaps get a much further discount because it's been on the market for so long. Look at comparable sales. You can forecast the property's long-term performance. So obviously that's not going to be 100%, but it's always good to just forecast, even if it's worst case scenario. Time your purchase will be important. Time in the market will be important too, and always, if you're looking at for an investment point of view, if you're not looking to live in it, establish a maximum ceiling purchase price, because it's really going to dictate whether it's going to be a feasible, financially positive investment. All right, let's have a look at how we find opportunities using Investar Search. So this is our pro membership platform, our software tools. So for those out there that are looking at doing it themselves and putting the time to find and do the research. So what is Investar Search? So think of it like Webjet for flights, or Booking.com for hotels. We do it for property. We've designed a unique platform, being Investar Search, which searches 40 property sites at any point in time. We're looking through over 900,000 listings, depending on obviously the time of the year. We've got 34 filters. You can have watch lists, you can save searches, turn on email alerts, and we analyze over 2,500 suburbs. So what can you do? So this is the search page, but from a discount point of view, these are some of the keywords that we're looking at when we're searching. So when you pick discount, we've hard-coded these keywords that we're looking at: bank says sell, bankrupt, deceased estate, distress, divorce, undervalue. When you see once interest rates start to increase, those people that have borrowed perhaps over borrow too much, or once their interest only loans run out and they need to switch to P&I, you may see a lot of forced sales where they can't afford to keep it anymore. That could be an opportunity to get a discount. So how, in addition to searching by keywords, what's another way of being sure that it's buying below value in the area? And this is where we have a filter called percentage of suburb median. So what this means is, and I'll keep the figures nice and round, if the median listing price for a property, say 4-bed house, is $100,000, if I set the max to 80%, that means it'll only show me those listings, those properties for sale, that are priced at $80,000 or less. So you're buying below the middle of that market. If you think of a bell curve, much more narrow on the left, it goes up. Most of the properties are in that that bell curve, and then it comes back down to the right, and that's where all your expensive properties are at. So if you're buying below what the middle of the market can afford and what most properties are selling at, that's where you can potentially, you're not only buying at a discount, you're potentially buying below value, and you've got the ability to manufacture growth in maybe a cosmetic reno to update it, get it instant equity from spending $5,000, $10,000, $15,000 on paint, new floors, tapware, and you maybe be able to increase your property by $30,000, $40,000, $50,000 depending on obviously the area. So percentage of suburb median, really, really useful to really save you time, get you the potential results, properties onto your shortlist much, much faster. So here's an example, a deceased estate in Reservoir, 590, sitting at 78.7% of the median listing price. So you can see that in the top right corner. There it is there. 3-bedroom home, and the median listing price for 3-bedroom houses in Reservoir is $750 in that table there. And you can see that, compared to the year before, 12.8% growth in terms of listing price. So still, again, rising area. So deceased estate, perfect to renovate or develop. STCA, subject to council approval. And then you can see there we throw in a lot of other stats there too. But so that's example of a discount deal. You can combine the 80% suburb median, discount keyword, and this is the result that you get. So, all right, what about for those looking at manufacturing growth? So we've got a renovation strategy. These are the keywords that we're looking at. Now I don't know whether or not you would renovate this house here. It's probably a knockdown. But I don't know if you can see it, but there's a house in the background there. It looks quite modern, it's been renovated. So to me, it looks like it's in a good area, just based off that. This is probably just obviously an abandoned house, but we're looking for keywords like add value, cosmetic, do up, renovate, renovators delight, TLC. So similar to the discount strategy, you picked a renovation strategy keyword, and again, use the percentage of suburb median. Now, again, remembering what I was talking about before about boom markets and slowing markets. If it's in a boom market and you're not getting many results with the 80%, then you just need to relax it a bit. You might have to increase it to 90%. Now, obviously, that will increase the risk of overcapitalizing because you're buying, perhaps too close to, to the middle of the market. But then it's about understanding the value, negotiating back. But again, if it's in a really hot area and it's just starting out, there is a lot of demand, especially for renovated properties, and you're in a good street, then it might be worth it because people are going to overpay or pay more anyway. So here's a couple of examples. We've got one in Sherwood, one in Coopers Plains, $560 for Sherwood, 73% median listing price for a 3-bedroom house, and Coopers Plains in Brisbane as well, $439, right on the 80% median listing price, $549. So there are all the numbers there. All right, what about those looking at subdivisions? So keywords, corner block, double block, dual frontage, STCA, which stands for subject to council approval. So agents will always use that because they obviously don't do the checks with council to make sure the zoning's right, what the minimum street frontage is and all that sort of stuff. So the key here is keyword strategy, subdivide, there it is there. Pick that, and as you can see, I'm just doing a radius search of Brisbane there, highlights the keywords, and then what we get is a couple of results. So you can see here one in Upper Mount Gravatt. You can see that the agent has overlaid the image with what they think you can do. So it's a 2-lot side-by-side subdivision, or it could just be a boundary realignment if it's 2 lots on one title there, and then one in Camira as well, which is over 8,500 square meters. So you can see that generally speaking, most subdivision deals are not going to be below median, because there's obviously, especially if the seller knows that the zoning's in place and the right council has allowed for a certain development to occur there. So there is an investment value there that's been added on top of what it's worth. So sellers will generally price it a lot higher. So in these cases with subdivisions, don't use the percentage of median listing price filter. Strata titling, so it's a very good manufacturing growth way. And again, if you can buy it at a discount, once you strata title it, if you decide to sell them all off, fantastic opportunity to generate short-term wealth or short-term gains. So we look for keywords like all on one title, duplex on one title, so you can split it, sell one off, keep the other, use the profits for the sale to pay down pretty much the loan on the one you keep, on one title, in one line, potential to strata. So again, it's just about highlighting the strata title keyword strategy filter. And here's an example in Victoria. This is quite an old listing, so potential to strata title, STCA. So this is, what is this? This is a 3 one-bedroom brick veneer units. So again, you need to check with the council if you can in fact strata title it. All right, so once you've found a couple of opportunities, guys, and it's really about understanding, is it in fact at a discount, or can I actually manufacture growth to create equity? And so this is where My Value, My Research comes in. This is where we partner with our data provider Price Finder, and you can see you can run a property report on any property across all of Australia, search any suburb as well. So here's an example of the one in Reservoir. Depending on the state and territory, guys, owner name details are not always available due to privacy restrictions. Each state's different. But this is a subdivision opportunity, I think, and you can have a look. There's our block there, 583 square meters. And if you have a look at some of the other properties down the street, you can see there's, it looks like there's 2, 3 lot subdivisions that have occurred. So it's a good sign. There's some precedence there. Left-hand side, there's a desktop valuation estimate. So based off recent sales of other 3-bedroom homes, it uses a computer algorithm to work out what it's roughly worth or potentially worth. Now, in terms of negotiation, how motivated are the sellers? So this is the listing history. This is part of the property report. You can actually see how long it's been on the market for. You see 107 days here, and it's also dropped the price by 9.1%. So it's not easily accessible, this data, through free sites, unless, of course, you're following a listing quite closely, and you can see the price drop. But every time the internet gets updated, the ad gets updated, it gets captured here. And you can see this property first hit the internet on the 26th of September in 2016, offers over 569. And every time they update the ad, whatever it might be, it will create a record. October, they changed to 545. November, dropped it to 537. Christmas being slower, they didn't bother updating the ad, probably let the listing remain as is. But then 10th of January, they cheekily relisted it, same agent, but they put it up at 10 grand, 547. So for the average investor, they may start putting in offers at 540, 545, not knowing that before Christmas, they were actually willing to accept 537 perhaps. So this really will help you understand how low you can potentially start off with and how much you can save. And at the end of the day, the more you can save, the better off that you're going to be. Comparable sales, so you can run comparable sales really quickly. Have a look, you control the data you want to see, be really, really accurate, so you're comparing apples with apples, putting land size, bedroom count, bathroom count. So, if you're doing a renovation strategy, you can really run a report 3-bed, 1 bath, have a look at the prices, median average, run 3-bed, 2 bath. What's the gap? What's the difference? Is the median price $100,000 more? And if you can found a property that only maybe cost you 20 grand to add an extra bathroom or an ensuite, probably not an ensuite, but an extra half bath, it might be worth that 20 grand to get 100 grand uplift. So we've got things like days on market here too. So you can see, it shows you how long it took it to sell, the original asking price compared to what it eventually sold for. So the search summary is really, really useful. So it'll give you a breakdown in terms of auctions. So again, one of the drivers in terms of the health of the market, clearance rates and stuff like that's available through there. And you'll be able to see, quickly see this summary. most expensive paid, cheapest paid, average and median. Usually when it says 0, it'll mean either two things. One, the price hasn't been captured yet, so it's just coming as 0. So you can just go in and remove that from the report and it will update. Or it could be a not an arm's length sale, so it could be a transfer of property from a family member to another. Excuse me. You have custom map searching too. So like I mentioned, you know, some areas, some suburbs could have a market, 2 or 3 markets within it. So if you know one part of the suburb sells higher than the other, and you really want to be specific and compare similar properties, you know, whether it just be waterfront versus the ones that don't have the same luxury, then you can draw the area that you're interested in and run a sales, listing or rentals report. So here's a rentals report. We can see in Reservoir, 191 rentals for a 6-month period, breaks it down by high, low, average, median, and also the days. So on average, it's taking 21 days to rent out a property in Reservoir. Interactive map, really good tool just to understand value. So you can see by color what properties have sold for in terms of price range. So there's a key at the top there. So anything in dark green indicates it's sold for under $1 million, but higher than 750K. So in this particular case, you can see there's a few high-end properties, and the smaller ones, which look like perhaps units or little villas, are in that dark blue, so under 500K, but higher than 250. Suburb flyover, so this is just another example of what we showed you before, the Werribee one, but this is Reservoir, so you can see how 2018, the median prices dropped, but we can, you can really go back to the early 90s or late 80s, depending on how old the suburb is. Basic demographic data, so who are you selling the property to or who's in the area, that's going to be important as well, especially if you're renovating or subdividing. There's no need to renovate or a property to really high end if there's no need for it. Suburb comparison, really, really useful. If you think about the ripple effect, again, just having a look at suburbs right next to each other, seeing if there's a trend, which is one that may be next to take off, and it's obviously cheaper to get in. So if I'm looking in this area here, Thomastown was probably a good one to have a look at. Under 700K, but growing or has been growing quite rapidly. The other ones are all close to the 800K mark, apart from Kingsbury and Faulkner. So crunch the numbers. So long-term cash flow forecast. For those looking at positive cash flow properties, now I will do a live demo and show you how to find positive cash flow properties. I didn't have a screenshot before, but obviously from the poll, there's a few you're looking at that, so I'll show you that in a sec. But it's about if you find an opportunity, you can click on Analyze in Full, put in the figures, and it will give you an indication of your gross yield, net yield. So you can be obviously as conservative or optimistic with the numbers as you want, but the more accurate you are, the better, especially then when it calculates your pre-tax cash flow per year. That's going to be pretty accurate. So we do then forecast depreciation and also potential tax refund, but that is going to be more of an estimate because your accountant may need to take other things into consideration. All right. So that's just a bit of, I guess, theory, guys. I'm going to now do a live demo and run through a couple of examples of how to quickly find deals, both from a discount, cash flow, and a couple of the manufactured growth strategies. So I hope that's been useful so far. So just bear with me while I just switch out of that. All right. Okay, so let's go to Investor Search. So how do we find discount deals or potentially heavily discounted deals quickly? So it's a combination, like I said, between the median listing price filter and the discount keyword strategy. All right, so I've had it open too long. Let me just log off and log back in. So as a pro member, you'll have access to all these tools. So you can access it 24/7. All right, so let's go into Investor Search. Okay, so keyword strategies. This is the filter here. So you can see here when I open that up, we've got a few hard-coded strategies there. Well, let's look at discount first. So look, the best tip I can give you for this is less is more. So I can see there's a few pro members online already, so you're probably taking this as a bit of a training session, but start off with less criteria, get more results, and then narrow it back. So let's just say I'm looking at discount deals. I'm going to use all the keywords, and I'll just do a quick search. I'm not even going to put a price range in. And you can see, obviously, depending on your internet's speed. Okay, Zara, renovation's not a problem. I will do a renovation example shortly, Zara. Okay, so you can see here, just based on the discount keyword strategies, I've got over 51,000 properties across Australia that have one or more of those keywords. So I'm going to go through all of those now. No, just kidding. So I'm going to filter them down. So if what we can do is left-hand side, open up the filter, and let's be a little bit more specific. I'm going to open up the keywords. I'm going to untick the all, and let's really focus on things like bankrupt, bank says sell, below valuation, deceased estate, desperate, distress, divorce, liquidation, mortgage in possession. All right, I won't go through all of them. Let's just do that, and also do a look at houses only, and percentage of suburb median. I want at least 20% below the median listing price. All right, so hit update. 51,000 now drops to 79. So see how quickly you can reduce your results. So again, if you're looking by a specific area, then you're not going to have that many results. But if you're all about the numbers, then you may have a few extra, a few that you need to go through each week. And again, you can refine it. You can, put in a maximum limit of 1 week only, so you only see the latest listings. But here's one in Bentley East, just happened to be Bentley East, asking 725. Median listing price 1.075 million, so there's a big gap. Open up the ad, deceased estate. Excellent future scope, so very generic from the agent. But quite quickly from a numbers point of view, I'll just zoom in there a little bit, guys. Median price is still rising for 3-bedroom houses. Now, again, I can tell it's probably not a house, hence why there's probably a big gap, because the address, number 3/107, so it could be a villa or a tower unit. So that's not a fair comparison, but the agent has listed it as a house, hence why it's coming up as a house. So just bear that in mind, guys. But let's just say if it was a house, but all the other stats look quite good. Vacancy rate 1.1%, very low. Average days on market 81. Now the 81 days is across all property types in the suburb. It's not just 3-bedroom houses. So if you remember back on the slides when I showed you through my research, you can run average days on market by customizing your search. So in there you can run one for 3-bedroom houses, and you can then compare it to what the average is for the suburb across all property types. All right, so let me go back. Let's just be a little bit more specific. More location options. I'll do a radius search. So I'll use the advanced features at the top. And we'll go search radius. And let's go search Perth. We're at 50 kilometers of Perth. 6,000, I think, is the postcode. 6,000. I just had a memory blank there. 6,000. I think, yeah, I'm pretty sure it's 6,000. I think South Australia is 5,000. Okay, 6,000. Discount, house, 80%, hit search. 13 matches. So there we go. Genuine house there in Kewdale, asking 315, but have a look at the growth. Obviously, we know Perth's at the bottom of the market at the moment. Mortgagee in possession, the character home, 3-bed, 1 bath. Okay. Vacancy rates decent, 2%. Average days on market 120. So not as bad as some other areas in Perth that I've seen. Okay, so let's go back. So any of these searches, guys, you can save. So I'll go to my save searches back on the front screen here. So if you do customize any filters, now you can't use you can't select 2 strategies. So on the discount strategy drop down, you can't select more than 1. But if you leave it on all, it will then show you all the keywords. So you can, if you're doing a renovation in a subdivision or a chunk deal, you can pick all the renovation keywords, all the subdivision keywords, tick them all. Save your search, so you can click the little black button down the bottom called Save My Search. Call it what you want, Reno and Subdivision or Chunk Deal, and then up the top, My Save Searches will have a list of anything that you save, so you can quickly rerun the search when you log in next time without having to go through the process of entering the filters again. You just click on it to run it. Okay, let's have a look at positive cash flow. We'll do positive cash flow first. I have a couple of people there, so I'll just reset all filters. So a couple of ways you can do positive cash flow for those that are looking at just buying something that's already cash flow positive. So this is not about creating something positive cash flow. So let's just say you want to buy a duplex or you want to buy something that's already generating good income, then you can select the positive cash flow keyword strategy, and it will pick up things like 10% yield, 8-9% yield, dual income, granny flats. So let's go up and do Brisbane. We'll go 50 Ks of 4,000, positive cash flow, and we'll hit search. 4,900 matches. So again, you need to be a little bit more specific. So I haven't put a price range in, but if I open up the ad, here we go. So enough space to add a granny flat. So hence why that's been popped up. So again, tailoring it's going to suit, because if you're not interested in granny flats, then obviously remove that. So if I open up the filters, go to more strategy option, if I remove all and really focus on just say dual income, double income, dual income, hit update, 4,000 now becomes 236. So Logan Central, beautifully renovated home, dual income. So it's not a duplex, but you can rent it. Obviously, they've renovated, I take it, and two separate entrances, probably an upstairs, downstairs, or a left side, right side. Now, there is another way to find cash flow positive properties. And it's not just basing it on the keywords, because this is, again, remember, it's basing on what the agent is saying. But what you can do is you can search by property yield or suburb yield. So in the property, I'll just explain the two differences. So in property yield, this relates to the property itself. So if you select, say, 6%, this means only show me properties that are currently estimated to be returning 6% gross yield. So if I hit search, and I forgot to choose, oh no, location's still there. So here we go, Woodridge. If the rent is, so how it calculates it is if here, potential gross yield, so you can see here in the snapshot, I'll just highlight there on the right-hand side, 7.8%. So this is higher than 6. And how it calculates it is if the ad has the rent in there, and in this case it has, here we go, $240 a week, our system can pick that up. And what it does is, which I won't have time to go through, you can actually set up your default profile and put in what you think expenses are going to be, your interest rate that you've been pre-approved of. So you put all those figures in, it will use it to calculate your cash flow. And you can see here, it's negative 305 before tax, 7.4% yield though, based off 240 divided by the asking price. Okay, now obviously if you can negotiate further, then your gross yield is going to increase. So it is just an estimate, it's not guaranteed. So just bear that in mind, guys. Now, if there's no rental advertised on the ad, because of all the data that we've had access to, based off the asking price, we can estimate what the rent may be based off all the previous data that we've had. So we'll use that as an estimate, but that's where you can then click on Analyze in Full, and you can update it once you've spoken to the agent, find out what actually the rental appraisal is, or if it is tenanted, what it is. You can put in the exact figures and get a much detailed forecast through that property analyzer tool to see if it in fact is 7.4% yield, but more importantly, have a look at your net yield. All right, so if I just minimize that, if I just sort of scroll down, see if I can find another one. Here we go, St. Lucia, University Suburb, 6.8% yield, $670 a week in rent. Uni Lodge though, so it's obviously it's a service, so it's a little bit different. So just bear that in mind. But okay, so you can see 6.1%, 8%, 7.7. So that's how it calculates it. Now, for those out there that are looking at maybe manufacturing a property to try and increase the rental yield, this is where suburb rental yield is important. So this is the difference. So this is where if you select 6% here, this is about the suburb. Show me properties in suburbs where the average suburb rental yield is 6%. And then this is where you can then combine it with the percentage of suburb median price discount strategy to see if you can find something that maybe needs a little bit of work where you can then up the rent because there is a high rental yield in the area. So let's hit search just based off that suburb. So we can see here, Beanley, for 2-bedroom units, the median gross yield is 6.4%. There's a Woodbridge one again, 7.1%. Deegan, 10% for a 1-bed unit. Okay, so that's how it differentiates those two filters. All right, so I hope that helps. All right, let's move on. Let's have a look at renovations. So I'll just reset all the filters. So keyword strategy, just pick renovate. All right, instead of spending a lot of time on the internet trawling through, site listings to see if the numbers stack up, I just simply select 4 filters: median listing price, property type house, keyword strategy renovation. Let's do a radius search of 50 Ks of Adelaide. Hit search, and you can see within seconds, I've got 121 possible matches I can go through. Now again, you guys will have a pre-approval, hopefully, in place, so you know what you can borrow, what your maximum purchase price is. So you put in a price range, and you're not going to have 120 to go through. You're going to have a much more condensed, precise list. So you can see how quickly that is. Broad view, 77% of the median listing price. Open up the ad. Tidy with plenty of potential. So that's why that one's picked up there. So again, you can obviously refine your search. All right, let me go back. Let's just do an extreme example. Like I mentioned before, you can use free text searching. So I'm going to remove the keyword renovate, and let's just get rid of the percentage of suburb median. And for those that living in Sydney, you probably obviously would have heard there was a couple of fire sales or fire damage sales, I think in Redfern last year or maybe the year before, and it sold for like $1 million, $2 million, I think, around the $1 million mark, just because of the location. So we go to more strategy options, add these keywords. Let's put in fire damage. Change it on the right-hand side from all words to exact phrase, and we'll hit search. So obviously, if you're doing your first reno, this is not going to be a good one to do. You want to be a little bit more experienced to tackle something like this. So now you've got a couple of examples here. So here's one in Long Gully in Victoria. Open up the ad, fire damage brick veneer home. It's valued at approximately $90,000. Now it's saying NA, no price available, but let's put it in there. Let's click on the listing. So I'll click underneath the photo. So it's been fenced off, so it's obviously not safe to be in there. And windows are all damaged, and there's obviously no internal photos. But pretty big block. I don't know the area, but yeah, we can have a quick look. Quite residential. So it's all about the research then. That's going to be important, right? Having a look at 3-bed, 1-bath houses on a block around the 550 square meter mark, seeing what they're selling at. So if you can get this property at $90,000 or less, but other 3-bed, 1-baths are say selling at 200, it's all then about working backwards and going, okay, how much is it going to cost me to fix this up? How bad is the extent of this fire damage? Is there anything structural that you need to do? So that's going to be really, really important. So here's one in Elizabeth Downs. See if we can Sunshine as well. So there's quite a few there. Let me change this up a bit. Let's do, say, perhaps not so bad, maybe smoke damaged. Go update. Okay, the Elizabeth Down ones. Open that up in South Australia. Renovate or detonate. So again, smoke damage. What's it asking? 135, median listing price 189. So to me, that's too close to the median. Big block though, 1,200 square meters. So it's about doing the numbers. Okay, so I hope that helps from a renovation point of view. Let's look at strata titling. So strata titling is where block of units perhaps is all on one title, and if the council allows it, you can subdivide them and then sell them all off individually, and that's obviously where you can manufacture equity and get your profit. So there's a couple of ways you can do it. You can first of all go to keyword strategy, select strata title, and it picks up all these keywords like potential to strata, on one title, and hit search. All right, so I've got nothing pop up for some reason. I think I probably have another filter turned on. I do, I've got smoke damage, so let me get rid of smoke damage. All right, and then we'll hit search again. And you can see how quickly the results turn up, right? You don't have to filter through ones that don't meet your criteria. So we've got, okay, over 26,000. All right, I'm gonna be a little bit more specific now. So there's a couple of ways. So let's just say you're looking for a block of units. Now there's two ways you can find a block of units too, guys, because again, depending on the agent, how they've listed it. Sometimes an agent will list it as a block of units. So you can select that in the property type filter, but sometimes they're lazy and they'll actually call it a unit. Whoops, call it a unit. So you have to do a search by unit, but set the minimum bed count to maybe 10 or 15. So obviously it's not a 10-bedroom unit, but it's 10 bedrooms in the unit complex or the block of apartments. So unfortunately, there's no consistency or policing in terms of the way they input data. So just something to be aware of. But let's just run a search. So I'm going to go block of units, get rid of the 10, and I'll just be a little bit specific in the strata title keywords. So I'll just untick all. Let's just focus on really the strata ones. So let's just go potential to strata, option to strata. No, we don't want strata approved, strata opportunity, strata opportunity. Get rid of registered. Okay, that'll do. We'll go search. Okay, so we've got a couple here, 6 across Australia. So here's one in Cooperoo. Block, 17 bedrooms, 8 bathrooms, 1,000 square meter block. Now you'll notice there's not a lot of data. So that's because the agent's listed as a 17 bedroom block, and we don't obviously have median listing prices for 17 bedroom blocks, hence why it's not available. But what the key is here is if you can strata title it, it's about understanding what those units are. Are they 3 bedroom units? Are they 2 bedroom units? And then running a report through My Value My Research to look at the median price, low, high, for 2 bedroom units in the area and seeing what they would sell for if you were able to strata title it. So let's have a look at this one here. Fully tenanted, it brings in 140 grand per year. Gross, my guess is, potential to strata the existing apartments and the DA in place to redevelop the site as well. So you can see how quickly, this is a fairly new listing too. Well, actually about a month old now. All right, so let's go back. Just conscious of time. So let's have a look at the last one, the last manufactured growth one, subdivisions. So again, if you're doing, if you're doing your first deal, subdivisions may not be the way to go, but again, just, everyone's different. Subdivisions, in my opinion, can take a long time, going through councils, approvals. So, doing your first deal, it may not be the easiest, but again, it depends obviously where you're at and if you're getting help. So again, similar thing, let's do radius. Let's go to Melbourne, 50 kilometers of 3,000. Melbourne is just getting denser and denser with the amount of subdivisions happening there. Let's go subdivide, and let's get rid of all the keywords. Let's just be specific. We'll go splitter, subdivide, subdivision. Won't worry about land size because the agent may not have put it in the ad. Let's hit search, and within a few seconds, 825 properties have come up. So, scrolling down, you can see, again, there's no point using the median listing price. You notice, there's no price listed. It's 127% over. Yeah, they're generally going to be priced high because of that investment value. So, open up this one here, median listing price 970. It's a corner block with this particular one. Here's one in Reservoir. 3-bedroom house, potential to subdivide, retain the existing residents potentially. So, 955 median listing price for a 3-bedroom home in Reservoir is 750. All right, let's just see if I wanted to narrow that down a little bit. Let's go to. I'll get rid of the. Or maybe put a price in actually. Let's go. Where's my price range? Here we go. We'll go house actually. Excuse me. And we'll put a price range in. Let's go at least under 900,000. Hit update. Down to 654. So again, location. You might want to reduce your radius, but as you can see here, there's quite a fair few. But again, it's very important that you check with obviously council. All right, guys, so that's from a searching point of view. So hopefully that's giving you a good idea of how our platform helps, in terms of finding deals. It is really, that's where it really adds value. It's reducing the amount of time you're spending finding stock or finding opportunities that meet your criteria. I've had clients tell me that they've saved them hours. It takes them more like, half an hour to find a few potentials, put in their short list, and then they spend more time in the research and analysis side of things to weigh up if it's worth actually even then going to the site, is it worth contacting agents and things like that. All right, so I've just got a couple of things to wrap up, and then I've got a couple of questions I think that people have put through. Oops, where are we? I'm a bit further ahead than that slide. Okay, here we go. All right, so anyone based in Melbourne, just a quick, oops, bear with me. Sorry guys, all right, here we go. So if anyone's based in Melbourne, we're actually running an event in Melbourne on the 30th of August. So look, if the tools aren't the thing for you, if you don't have the time to do it yourself, but you want a bit of extra help, feel free to come along to our Melbourne event. I'll put a poll up on screen, so if you do want to register, just hit yes and we can register your name and you'll get emailed the details. But registration is from 6:30, it's completely free, no obligation. You can meet some of the team. The event will kick off from 7 o'clock, goes for about an hour and a half, and there'll be drinks and nibbles at the end. So if you are based in Melbourne, that's on Thursday, the 30th of August, so in 2 weeks. So that's more if you're not looking at doing it yourself, not looking using the tools. This is more about getting a plan put together for you to help you source properties to generate long-term wealth. So if you're interested, feel free, and I'll just launch that poll on screen. So if you are interested, if you are in Melbourne and you would like to come along, just hit yes, and we can get the team to register you, get the details sent to you tomorrow. All right, so I'll just keep that open for a couple of seconds, and then we've only got 3 slides left, or 4 slides left, I think. All right, so I'll just close that off in 3 seconds, guys. So any last yeses or nos? All right, so I'll close that off. All right, thank you, guys. Look forward to seeing you guys there. All right, so if you are interested, guys, in the platform of what you've seen tonight, you can obviously sign up or request for a more personalized demo. So you get access to Investor Search, My Research. There's other tools there that I didn't go through tonight, but I'll launch that on screen. So if you'd like a more in-depth demo, there are half-hour sessions. We can tailor it a little bit more to suit what you're looking for. Obviously went through a couple of strategies quite quickly. If you'd like to book in a demo, just hit yes. We'll get in contact you with over the next day or two, and we can arrange a demo. Or you can jump on the website yourself and have a look at the next availability. There is a short 6-minute demo video that I recorded recently. So I'll just shoot that onto the chat section, guys. So the link will come out to all of you, I think. Yep, so it's just come out there. So there's a 6-minute video on the left-hand side there, guys. Just scroll down slightly. You can watch a little bit of, but if you want a more in-depth demo, have a look at the calendar. Just click on any of the availability, which is in yellow, and we can get in touch. But if you hit yes on the screen, we can contact you as well, just to book in a time. All right, thank you. All right, I'll close that off, guys. So if you missed out on the poll there, just feel free to go to that link. However, if you're more interested, if the tools aren't what you're after, guys, and you're actually looking for a bit of assistance, you want to have a discussion around strategy and getting an idea of an assessment of your financial structure, and this is about us helping you build a plan. So if you'd like to take advantage of a free session, we can help you with that. So again, I'll just launch that on screen. If you do indicate yes, we'll definitely get in touch and find out a few details about your current situation, what you're trying to achieve, where you're at the moment, and then we can obviously book you in for a session with one of our property strategists to see if we can help. All right, guys. So look, that's going to be the last poll and last slide. So yeah, I'll just give it a few more seconds for anyone to finish the vote, and then I'll get to the questions. So if you've got any questions as well, guys, feel free just to type that in. All right, I'll close that off in 3 seconds. All right, thank you. All right, so I'll just put the links up there in case you've missed it. But all right, let me head over to the question section. All right, so I've still got a fair few people sticking around, so thank you guys for your time tonight. All right. Okay, so thank you for your question, Gemma. So Gemma's just asked, can you search by zoning for future development potential? So look, Gemma, unfortunately, because there's so many different councils managing zoning information and they're all updated at different times, currently we don't have that. It is on our wish list. So, but in Investor Search, I didn't show you at the time, any property that's listed for sale, it will give you the link to the local council that property falls under. So you click on it there, take you straight to the council website, you go to the planning section or the mapping section that they have, and you should be able to then access the zoning and future development potential through there. It does give you basic zoning data. Yes, Gemma, it does link to Price Finder, but the zoning information in Price Finder is very limited. So unless there's a new feature that I'm not aware of, it does give you basic zoning data, but it is very, very basic, like at a basic level. So if you know something that I don't, please let me know, and I can obviously research it further, or even contact Price Finder if it is a new feature, and if we don't have it, I can obviously negotiate that and get that through to you guys. Okay, Is there a recording of this webinar? Yes, there is, Raj. So it will be made available over the next couple of days. I believe it will be emailed to you. If not, it will definitely be uploaded onto our blog, which we have all our other webinars. Paul, thank you for your question. Good question. Are there any options for commercial property searches? So commercial is obviously a good one for property yield or rental yields. Unfortunately not, Paul. Commercial is a completely different ballgame. We don't, and look, there's no plans for commercial to be added to our search functionality. We just don't believe we can add any value by putting it onto our system, where you can use free sites like realcommercial.com.au, I think it's called. There's another one as well. One's owned by Domain, one's owned by realestate.com, where you can get all that information for free anyway. So unfortunately, yeah, you can't, but through my value, my research, you can definitely research past commercial sales. It's to see it, but again, leasing information is going to be quite difficult to obtain as well, just due to the commercial sensitivity of it. Claude and a couple of other people just ask how much it is. Yeah, guys, so sorry, I forgot to mention that. So we are running a special until Monday. So let me just bring the pricing up for you. So on our website, so you can access this through the demo link that I sent before, guys. But if not, if you go to our website and just go to membership options on the top and go to Pro membership and just hit get started. So we have a casual membership. The discounted rate's $99 a month, no lock-in contract, cancel at any time. So if you're a first-time investor, this is a great option because it's like Netflix. You can just turn it on and off on a monthly basis. Just get in contact with us at least a day before your membership anniversary. The retail rate's $149. This includes Price Finder. So I think Price Finder retails at $175 a month. So you're definitely getting more good value. Or we have a 1-year contract or 2-year contract. So you pay that up front. Like the longer you commit, the better discount it is. So normally 12 months is $14.90, now at $9.90, and 24 months usually $19.90, and it's at $17.90. All right. So if you've already had a demo, if you've seen our tools already in the past, and tonight was really about a refresher, you're ready to go, you don't need a demo, just jump on the site and you can actually sign up straight away. You'll get a username and password issued to you. All right, so I had a few people ask that question, so I'll just skip through a few questions there. So I've got a question here, how to make $100,000 passive income? So that is a great question. So look, it is possible. So commercial is an option. Short-term rentals is one as well. So, renting a property through Airbnb or stays, things like that. I have seen a few examples of those recently where location is obviously going to be really important in that regard. Making sure that you've got a good property that's well located for tourists or whatever the reason it might be, you can definitely earn income over that. When it comes to things like duplexes and dual income, you're not going to get anything like $100,000 passive income. You're talking more perhaps 40,000, maybe 50,000, again, depending on the area and the type of property. That's probably more multi-occ. But it'll definitely, duplexes and dual income will definitely be positive cash flow. But yeah, in terms of 100K, you're talking more multi-occs, short stays, and commercial. Let me scroll down. Natine, sorry for the pronunciation if that's not right, Natine. Is this database only searching existing properties, or can we also search brand new, like block of land or house and land packages? Yeah, Natine, you definitely can. So again, I didn't go through development search. So development search focuses purely on brand new property, and there is opportunity for you to access off-market ones as well. So that's not available to the general public. It's only available to channels like ourselves. And you can actually see what stock's still remaining, if it's first stage or not. And we do overlay our stats on top of it as well. So things like vacancy rates and median prices. Through Investar Search, it does purely focus on existing, but if there is any brand new listed on those sites like Domain or realestate.com or other sites, we'll pick them up as well. There is a category for off the plan. Joshua's just asked, for interstate purchases, do your users typically employ buyer's agents to acquire once you've found a property on REI, or do they buy sight unseen and buy remotely entirely? Great question, Joshua. It all depends on the person. There has been a couple of people we've helped purchase that have bought unseen. It's all based on the data. Look, if it's based in the areas, our head office is based up here in Queensland, so there has been instances where we've gone out and done an inspection. We don't do it normally, but depending on obviously the deal and obviously the client, we may do that. But it really depends. Some buy it unseen, some will fly up because if they didn't use our services, they were going to fly up anyway to inspect. They may use a partner they've done with before. They may have networks up here, so it really depends. So I know people have done different in each of those scenarios that you've described. Gemma's just asked, how long will the special be on for? If we sign up, does the price stay the same with ongoing membership? So the discounted price is available until Monday next week. So 20th of Monday, and yes, the price will stay the same. So if you sign up to the casual $99 this month and you continue using it for the next 3 months, so the next 3 months will be $99 a month. If you cancel after this month and decide you want to come back again in 6 months, we will be able to offer you the same discounted rate because you're a returning customer. So you'll be able to return on $99, or if we have better rates, then we'll be able to offer you perhaps even a better rate as well. Here's a great question. How long is a piece of string? What is the best investment in terms of future profit? Would you recommend a unit, apartment, or a house? It really depends. I can't answer that. It's too generic, that question. But look, generally speaking, in terms of future, and again, it depends on what you're doing. Everyone's different. But if you're looking at long-term wealth and capital growth, house is obviously going to be better because you've got more land. All right, the value's in the land. Whereas with units, apartments, even though you have a share in the land, it's obviously a much smaller percentage because there's a strata complex, so the land is divided up between everyone in the complex. But there are some apartments in some areas where you can get great growth. I mean, Sydney, median unit prices there. Look, I ran a webinar last week. Forgive me for the numbers, but I believe that the median price for units in Sydney were higher than most other capital cities in terms of houses. So it really depends on what you're trying to achieve, Baria. But generally speaking, you're going to get more appreciation in land. And so if you have a house on a pretty big block of land, that's going to be your best bet. All right. Not to say apartments aren't great. Again, it just depends on your goals, what you're trying to achieve, your budget. Okay, because you can still get good equity uplift in apartments. So if it's your first purchase, you may only be able to afford an apartment, buy it in a good area, blue chip suburb, get some growth, and then your second purchase could be a house. My first purchase was an apartment too, by the way, guys, and I bought it at when the interest rates were at 8%, so back in 2006. So, and for me, it was about time in the market. I've had it now for a very long time, and it's definitely gone up in value. It's only 5 k's from the city. So, and I bought it around Christmas time too, so there was not many buyers. All right, guys, that seems to be all the questions. So look, I think I'm a little bit over time, but look, I'm happy to take questions. So look, I hope that's been helpful, guys. So for those that are ready to jump on and you're ready to buy, before get in before the Christmas period, which is only about 5 months away. I'm sure we'll probably start seeing decorations hitting the supermarket soon. The pro membership platform is really going to assist. So if you're not ready to go, the demo, please take advantage of the demo. We'll spend some, half an hour with you, be a little bit more specific, answer any questions that you have that I haven't been able to do tonight, and hopefully you'll be able to help you get into property and use it as a vehicle to help you build wealth over time. And yeah, if you missed my webinar last week, really good. It was all about the numbers. Have a look at the stats. It's on our blog. It was the Property Market Update 2018. Have a look at how the numbers have changed for units and houses over the last 20 years. 30 years. If you held onto a house for that long, you would have had over 100% growth. So have a look at that if you get a chance. I really do encourage it. It was a really good, it was really actually interesting putting it together and actually having a look at the numbers. All right, so thank you so much, guys. I look forward to obviously speaking to a few of you who've said yes over the next couple of days, and we'll book you in for a demo or a strategy session. But thank you again for taking an hour out of your Thursday or Wednesday night. Look, I'm sure it's definitely going to be beneficial for you long term. And until next time, guys, I hope you have a great night and look forward to talking to you in the future. So thanks again, guys, and enjoy the rest of your night.